Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the complex world of business filings and sometimes find a few skeletons in the closet. Today we are diving into International General Insurance Holdings Limited and what their latest report tells us about their performance. We've got some interesting numbers here that paint a picture of their financial health, and for those of you who just love getting straight to the good stuff, make sure you're subscribed because we break down these important documents every week. Also, hop over to our Discord server, linked in the description below, to chat with other corporate finance enthusiasts. Alright, so what we're looking at here is a Form 6K, which is basically a report that foreign companies have to file when important stuff happens. This particular one is for the month of August 2025, and it tells us a lot about what International General Insurance Holdings Limited, or IGIC as they're also known, has been up to. Now, the real juicy part of these filings is often the financial statements. This filing includes their interim financial statements through June 30, 2025. Think of this as a mid-year checkup for the company's money matters. We can see information about retained earnings, which is the profit a company keeps and reinvests back into the business. For the period ending June 30, 2025, the numbers here are important to see how much of their accumulated profits they have available. Then we have common stock, which represents ownership in the company. The figures related to common stock are key for understanding the equity structure of AGIC. Additional paid-in capital is the amount investors have paid for stock above its par value. This tells us about how much extra capital the company has raised from issuing stock beyond the basic share price. Treasury stock is basically stock that the company has bought back from shareholders. This can be a sign of confidence from the company in its own stock or a way to manage its share count. We see specific figures for treasury stock as of June 30, 2025. Accumulated other comprehensive income includes unrealized gains and losses that haven't been included in net income yet but affect the company's equity. It's a bit of a catch-all for certain financial events. The report also gives us a look at their equity securities, which are investments in other companies. Understanding how much they have invested in other businesses and the value of those investments is crucial. The equity method is used when a company has significant influence over another company, usually with a 20 to 50% ownership stake. Seeing the value attributed to these investments tells us about their strategic partnerships and how those are performing. We see figures for equity method investees as of June 30, 2025, which is a good indicator of success in their investment strategy. IGIC is an insurance company, so it's natural to see details about their different product lines. Here we see data for other short duration insurance products, which could include things like travel insurance or property insurance that doesn't last for a long time. Reinsurance is a really important concept in the insurance world. It's basically insurance for insurance companies. IGIC participates in the reinsurance business, and the filing breaks down performance for this segment for the 6 months ending June 30, 2025. This is a significant part of their operations. We also get a look at their other long duration insurance products. These are policies that are expected to last for a long time, like life insurance or annuities. The performance of these lines is key to understanding the company's long-term stability. The company also holds investments in debt securities. Here we see details on their holdings of foreign government debt securities. This is a way to diversify their investment portfolio and reduce risk. Alongside government debt, they also invest in corporate debt securities. This means they are lending money to companies in exchange for interest payments. Understanding the quality and amount of these corporate debt holdings is vital. Now, when it comes to valuing these investments, especially debt and equity securities, companies use different levels of inputs. Level 1 inputs are the most reliable because they are based on unadjusted quoted prices in active markets for identical assets or liabilities. We see their holdings of foreign government debt securities and corporate debt securities valued using Level 1 inputs as of June 30, 2020. Level 2 inputs are a bit less direct. They include quoted prices for similar assets in active markets or prices for identical assets in markets that are not active. The filing shows us how much of their foreign government and corporate debt securities fall into this category. Level 3 inputs are the least reliable. These are inputs that are not observable and are based on the company's own assumptions and valuations. It's important to see how much of their portfolio is valued using level 3 inputs. As this can introduce more uncertainty, we see the breakdown for both foreign government and corporate debt securities. To get a true sense of the company's progress, we need to compare these numbers to previous periods. The filing provides data points going back to January 1, 2024, allowing us to see the trends and whether the company is moving in the right direction. We can look at how their common stock, additional paid-in capital, and treasury stock have changed from the beginning of 2024 through the first half of 2025 to understand their capital structure evolution. Comparing the figures at June 30, 2024 to June 30, 2025 is critical for understanding the business performance over a year. This gives us a clearer picture of growth or contraction. The data also extends to the end of 2024, allowing us to see their financial position at the end of the last fiscal year, which is useful for year-over-year comparisons. And for the half-year report, we see the changes from the start of 2025 right up to the end of June. This helps us analyze their performance in the first half of the current year. The specific figures at June 30, 2025 are the most current snapshot of their financial standing, reflecting the immediate impact of their operations and market conditions. We also get a look back at the end of 2023, 2024, and the present moment in 2025. This multi-year perspective is essential for spotting longer-term trends that might not be visible in shorter comparisons. The financial data for the period from January 1, 2024 to December 31, 2024 provides a full year of performance that we can compare against the first half of 2025. Similarly, the comparison between the full year 2024 and the first 6 months of 2025 in segments like reinsurance and long duration insurance products will tell us if these areas are growing or shrinking. We can track how their various insurance product lines like short duration and long duration products and their reinsurance business performed over the first half of 2024 and compare that to the same period in 2025. This helps us see the momentum in their core business. Scroll 220523 look and interesting. We also see a date here, May 23, 2022. This might refer to an earlier filing or a significant event that provides historical context for the company's journey. Another date, June 7, 2024, is also present. This could mark another important milestone or event relevant to their financial reporting or operations. Now, pulling all these numbers together, what's the story here? IGIC is operating in the insurance sector, which is known for being quite regulated and sensitive to economic conditions. They're engaged in reinsurance, which is a specialized area, and they've got a diverse portfolio of insurance products. The way they value their investment portfolio, especially the different levels of fair value inputs, suggests they are being transparent about the assumptions behind those valuations. The consistent reporting across different periods from the end of 2023 through the middle of 2025 allows us to see the company's trajectory. If their retained earnings are growing and their capital structure is stable, it indicates a healthy business. However, we need to see the actual financial numbers themselves to make a definitive judgment. The focus on different 5 allows us to see the company's trajectory. If their retained earnings are growing and their capital structure is stable, it indicates a healthy business. However, we'd need to see the actual financial numbers themselves to make a definitive judgment. The focus on different. So what's my take on all this? IGIC, based on the structure of this report and the types of information disclosed, appears to be a company that values detailed financial reporting. They are providing a lot of information about their investments and their equity structure, which is a good sign of transparency. The inclusion of data across multiple periods allows for a good historical analysis. However, without the actual dollar amounts for these items, it's hard to say if they are truly thriving or just treading water. The key risks for an insurer like IGIC usually involve unexpected claims, changes in interest rates affecting their investment income, and regulatory changes. On the flip side, opportunities could lie in expanding into new markets, developing innovative insurance products, or capitalizing on economic growth. Ultimately, a deeper dive into the specific financial figures from the consolidated statements would be needed to give a more concrete assessment of their strengths and weaknesses. Alright, that's our breakdown of what went into this IGIC filing. What are your thoughts on the information we've uncovered? Does this give you a clearer picture of the company's financial health, or do you have more questions? Let us know in the comments below. If you found this analysis helpful, please give it a thumbs up and subscribe to Corporate Decoder for more in-depth looks at financial reports. And don't forget to join our Discord community, which you'll find linked in the description. Thanks for watching, and we'll see you in the next one.